Our nation is back, bigger, better, richer, and stronger than ever before.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A turnaround for the ages. President Trump touts his economic policies in the State of the Union address. Stocks turning once again. Futures pretty steady now after a relief rally from another AI scare. And all of that as investors await quarterly results from Nvidia this afternoon. It's going to be a big afternoon for Nvidia investors and those of us interested. Let's take a look at how markets stand in the run-up to the open. So after that relief rally yesterday where we saw the S&P up almost 0.8%, the Nasdaq up 1.1%, we could be seeing that continue again today. Now, futures did erase their gains after the State of the Union address. Perhaps they were looking for more policy proposals from the president. But now we're firmly back in the green again. Let's take a look at the bond universe, perhaps more interesting elsewhere in the world than in the US. We have that 10-year yield creeping up just ever so slightly to above 405, but generally in the same environment that we've been in for the last few days. Let's look at Japan, though, because more interesting developments in Japan and some dislocations potentially in yields, particularly at the back end. We saw a rise, and you can see still a rise there for the 30-year yield of 8 basis points. The 40-year yield was up 13 basis points at one point after Sanae Takaichi nominated 2 considered dovish members to replace some retiring members to the BOJ. Not just dovish, but reflationary, and so they may not be looking at inflation as a problem at all in Japan. And so that's causing a little bit of ructions. As you can see, the yen now is up about 156.61. It was below that, about one big figure earlier on. And the Nikkei 225, of course, reaping the benefits of a weaker yen, up 2.2% in the session. All right, all that in the next hour. But first, let's get some individual movers. Here's Abir Abu Omar. Abir.
Good morning, Vonnie. Let's start with HP, down 5% in the pre-trade this morning. The stock is retreating on a bunch of different factors. Now, earnings is one of them. Profit is going to miss average analyst estimates. There is a tariff story as well. Now, the company has had to move some of its operations out of China to compensate or to mitigate that effect of President Donald Trump's tariffs. But also, and what is quite interesting here, is a story that we've mentioned a bit on this program before, and that is the demand for memory chips. Now, HP came out and said that this demand for memory chips, the increase in prices of those chips is affecting its margins, and that is expected to continue into next year and possibly the year after. So the stock not doing very well this morning. Moving on to Workday, an AI story. I don't know if it would be a regular day if we don't talk about artificial intelligence, Vonnie. So Workday is down 8.3%. Now the stock is losing this morning on those AI disruptions. Earnings is also another story, but this AI disruption that we saw create a rout in the S&P a couple of days ago. Now the futures picture looks a little bit better, but this stock is down on the AI disruption game. And then finally, a little bit different, Axon is up in the pre-trade this morning. Now, this is a company that manufactures tasers and some public safety equipment, and it is doing well, 16% on the back of earnings. A fun fact that was pointed out to me this morning is this is the third best performing stock in the S&P 500 this century. So that's Axon for you. Back to you, Bonnie.
Wow, this century, Abir. Do we really talk in centuries now? Thank you so much, Abir Abu Omar. And coming up in this hour, we'll discuss the credit environment with Henrietta Pacquement of Allspring Global Investments. But first, President Trump delivering the longest ever televised State of the Union address.
One of the primary reasons for our country's stunning economic turnaround, the biggest in history, where the Dow Jones broke 50,000 4 years ahead of schedule, and the S&P hit 7,000, where it wasn't supposed to do it for many years, were tariffs. I used these tariffs, took in hundreds of billions of dollars to make great deals for our country, both economically and on a national security basis.
Dozens of Democratic senators and House lawmakers skipping the event, including Democratic Senator Chris Murphy, who said, quote, "Donald Trump is making a mockery of this great institution and he doesn't deserve an audience. These are not normal times and Democrats have to stop behaving normally." Joining us now is Bloomberg's Laura Davison. Laura, you expect some partisanship at events like this. Was this particularly bad, with many, many Democrats walking out and indeed staging counter events?
Yeah, this was an event where lots of Democrats from the start decided just not to attend. So the Democratic side was a little bit lighter. You had one Democrat at the very beginning who was ejected from the chamber. He had a sign that said that black people are not apes, referencing a social media post that Trump had posted and since apologized for in recent days. There were occasional moments where Trump was interrupted by shouting. That's really become a characteristic of these speeches, in both the Trump years, Biden years, as well as during Obama years as well, where there have been sort of feedback, euphemistically from the lawmakers in the room, largely from the other party.
Yep, absolutely. Laura, I was listening to the speech and I didn't hear too much that was new, if anything, in fact. He did talk a lot about affordability at the very beginning. It pledged new savings plans for workers without 401ks, but even that's not exactly new, is it?
Correct. That is actually a part of a bill that was passed under President Joe Biden back in 2022. This would allow some workers who don't have 401ks, employer-sponsored plans, to get a federal match of about $1,000 each year. This is set to go into effect in 2027. So this is something that Trump really borrowed rather than a new policy plan he's coming forward. This speech was really devoid of any sort of new policy plans. Republicans who were hoping to have some ideas to be able to take back to their constituents to talk about as they're campaigning for the midterms were left sorely disappointed. Trump really looked backwards. He, touted the economy, he touted his tax cuts, but he didn't really give the party something to seize on going forward.
And he did mention several agenda items that really have already been mentioned are pretty stalled in Congress on healthcare and other items. Do we see any legislation before the midterms?
It's going to be really hard for Congress to pass anything before the midterms. Every member of the House is up for re-election, and 33 of the senators. Remember, we're still in a partial government shutdown. The Department of Homeland Security currently is without funding. Some of the more essential operations are able to continue. So the scope of this shutdown is pretty limited. But, Congress has really been mired in some of these basic funding fights, funding the federal government, which is sort of their most basic duty. Doing anything beyond that seems almost impossible, particularly in an election year.
And Laura, just briefly, towards the end, and we had to wait until the end, it was a very domestic-focused speech. He did move on to foreign policy, eschewed any mention of China, really, but he did talk briefly about Iran, and it sounded a little threatening. He said Iran had resumed its pursuit of sinister nuclear aims. Can we glean anything about any potential attack from those remarks?
Yeah, these were some of the most sharp remarks from Trump. He did reiterate that he wants to find a diplomatic solution here, but was very clear that he would not allow Iran to get a nuclear weapon, and suggested that U.S. Could use more force to deter that. He suggested that Iran is looking to build missiles that could hit the U.S. And was clear that he would not stand for that.
All right, Laura, thank you so much. Laura Davison there for us. Futures higher this morning after days of swings from AI disruption woes. Another headline out of Anthropic that the AI firm is now loosening its safety policy, writing in a blog post, quote, "The policy environment has shifted towards prioritizing AI competitiveness and economic growth, while safety-oriented discussions have yet to gain meaningful traction at the federal level." Let's bring in Bloomberg's Neil Campling for more on this now. Is this an ethos changing? Should we be concerned, Neil?
Morning, Bonnie. I mean, it just so happens that they'd had a little bit of an argument with the Defense Department. And so, last week they were talking about the safeguards were essential to the AI safeguards. And now all of a sudden it's about having to reduce these safeguards in the interests of driving the technology adoption. I think it's an interesting development, and it also tells you that perhaps they had to blink first because the DoD wasn't going to. Interesting
timing, because, as you say, they have a deadline of Friday at 5:01 p.m. to get in line with the Pentagon or else be put on a list. Let's move to Nvidia, because that's going to be huge. Free cash flow is supposed to grow something like 123% year over year. Margins will also be on watch. What else should we be watching out for?
I think the price reaction is the most important thing, because Nvidia, just like the Nasdaq, has underperformed semiconductors since it reached an all-time high in October. We kind of need some kind of unexpected mic drop from the results and the guidance tonight to really get the stock moving again, I think. So it's where is that left field surprise going to come from? Because we need a new catalyst, I think, really to confirm leadership.
Yeah, I mean, you really have to put a rabbit out of the hat at this point if you're Jensen Huang. The multi-billion-dollar investments, though, in Anthropic and OpenAI, surely they'll get questions on that, at least on the call.
There will be questions. Obviously, they are helping fund some of their own customers to really leverage off of the infrastructure investments. The other thing, I suppose, is that if we look at the latest generation of technologies in terms of the cost of the racks, there is a significant investment that's going into AI. We know that the hyperscalers are investing billions and billions, probably 600 billion plus this year. So you need to kind of have this ecosystem that is supported by these investments. But at some point, as you say, we're going to need to focus on ROI. When are we going to see returns from these investments? Not so much necessarily for Nvidia, but for these companies that are receiving the investment and are investing in this hyperscale.
And Neil, the other fascinating company we'll be watching tonight is Salesforce, right? And particularly now after the software sell-off, Salesforce has to get out there and really prove that AI is helping them and that they have more of a moat than others. Is this going to turn into sort of a game of survivor for these companies? I
think it's a game of survivor for many of the companies in the space. Obviously, Salesforce itself was a disruptor previously. It disrupted the traditional software model. Mark Benioff is very proud of that. Be interesting to see whether he's on the defense or the offense tonight in terms of the message that he delivers. But it probably is just as important as Nvidia in terms of understanding the AI risks and opportunities that are currently in the marketplace that investors are so nervous about.
That's such a good point, the disruptor getting disrupted. And as you say, their business model is a little more defensive than others in the space. Neil, thank you so much. We'll be getting some analysis, no doubt, afterwards from Neil Campling of Bloomberg. Thank you. A bidding war brewing once again. Warner Brothers taking another look at Paramount Skydance, saying Paramount's new $31 a share buyout offer could lead to a better deal than the existing agreement with Netflix. Bloomberg's Manuel Maigori joins us now for more. So the board hasn't finalized its decision, but it seems like they're leaning towards moving away from the Netflix bid, which would then give Netflix 4 days to come up with more money, I guess, Manuel. Does it?
Yeah, it is indeed, Bonnie, another super fascinating step in this saga that's been ongoing and keeping us very busy for a few months already. And yet Paramount came back with another sweetened offer, $31 a share for a full buyout of Warner Brothers. And now, obviously, Warner Brothers has indicated that they are open to further talks. Still, they don't fully back the offer. They're still going with the Netflix agreement, but obviously now it opens up a new window for further talks and kind of trying to negotiate a potential deal. Obviously, a lot of questions remain open on what the next steps would be, and if the board were to back Paramount's new offer, obviously Netflix would also have a 4-day window to come back with a potential new proposal. So super interesting to watch for sure.
So apparently this new offer values Warner Brothers at $108 billion, including debt, while Netflix proposal values it at about $82.7 billion. But of course, we're not including the cable networks there. Would it be easier to sell with the cable networks, or is that a consideration at all?
Yes, I mean, Paramount has made it clear that they want it all, and that they've also been quite explicit in the different tweaks and amendments they've made to the offer to make it compelling enough for the board to consider. Now, it is true that Warner Brothers believes that spinning out some of the assets, Vonnie, may create more shareholder value down the road. That's why they embraced, or they agreed to a deal with Netflix, which is not for the whole company, but mostly focused on HBO and the studios. Now the question is, and some shareholders have been very vocal, right, that they'd like to see Warner Brothers engage with Paramount because they feel that the offer is more superior. And also, let's bear in mind that the regulatory approvals can be quite tricky here. It's a massive deal in a highly consolidated industry, and this deal is very transformative. It's going to have global implications, putting these two big mega companies together for consumers at the end of the day as well. So regulators are going to take a very close look, as they've mentioned in the past, and offering a clear pathway towards that approval is very important in this transaction.
And of course, we get Paramount Skydance earnings later today as well, Manuel. So a lot to watch for. Manuel Maigori, thank you. Now to other top stories trending on the terminal this morning. UBS strategists are seeing a grimmer worst-case scenario for private credit. UBS now says default rates could rise as high as 15% if AI triggers an aggressive disruption among corporate borrowers. That forecast up from the 13% UBS initially had less than a month ago. General Atlantic is said to be selling a stake in ByteDance that would value the company at $550 billion. That's according to Reuters. The potential sale would be the first since TikTok and ByteDance closed a deal to transfer part of their U.S. operations to American investors in January. General Atlantic and ByteDance didn't immediately respond to requests for comment. And Aston Martin cuts jobs. The company plans to slash as much as a fifth of its roughly 3,000-person workforce. The British luxury car maker has been faced with product delays, quality problems, and higher U.S. tariffs. Coming up, HSBC jumping to a record as it beats on earnings and boosts guidance. We'll bring you our interview with CEO George El-Hedary next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in London. Shares of HSBC rising in London after the lender's profit beat the street's estimates and it raised some targets. Bloomberg spoke with CEO George El-Hedary earlier.
We are very pleased with the 2025 results. I think the key message, Haslinda, to take forward is, number one, we are performing, and this performance is delivering good earnings, strong earnings, and is delivering strong growth in all four businesses and all the key indicators that we look at, and strong distributions to our shareholders with the increase of dividend by 14% to 75 cents per dollar. The second key message is that we are transforming with precision, with discipline, and we're doing it at pace, and we expect to be able to conclude a number of the actions we set out to do earlier than initially planned. And the third key takeaway is that we are confident in our ability to meet our upgraded targets, and we're therefore investing for growth to be able to deliver growth. We shared that we expect now for 26, 27, and 28, we've targeted for 26, 27, and 28 revenue growing every year, rising to 5% in 28, and we have targeted a return on tangible equity, excluding notable items, for each of these 3 years of 17% or higher.
But Georges, there are still some concerns. The Hong Kong and Chinese commercial real estate weighing on your numbers. You book a charge of $700 million. Have you seen the worst, and what are you anticipating? When do you see a turnaround?
So first, Hong Kong remains a structurally high-growth economy, and we have strong conviction in the opportunities available for us in Hong Kong. We have a market leadership position, and we're consolidating our market leadership. I mean, testament to that, as you called out earlier, Haslinda, is the privatization of Hang Seng Bank, which we completed ahead of time. The growth opportunities are multiple. Hong Kong is on track or poised to become the world's largest cross-border wealth hub before the end of the decade. We have a leadership position to capture these opportunities. Hong Kong is a major trading hub and the super connector between the mainland, and the world, and those flows. We have a leadership role in capturing these opportunities. So these underlying structural growth opportunities are real. Insofar the Hong Kong commercial real estate is concerned, we've always believed, and we continue to believe, that this is a cycle. We know this market very well, right? 161 years in this market. if it's a cycle, when we look through the cycle, we are constructive and positive about the medium to long term. We already see signs of normalization in the residential space. We already see some easing because of interest rates coming off and the supply-demand dynamic improving. Right. And we will support our customers in the short term, but we remain constructive of how it will evolve in the medium to long term.
HSBC CEO George El-Henry with Bloomberg's Haslinda Aman. This is Bloomberg. Time now for your front page news, and major outlets all leading with President Trump's State of the Union address. First up, the Wall Street Journal leading with President Trump's focus on the economy. The Journal saying he might face hurdles in persuading Americans the traditional measures of economic health are strong when economic sentiment is low. Next up, the New York Times leads with the boycott by dozens of Democrat House and Senate members and the counter-event on the National Mall. The Times says Democrats who left their seats in the chamber said they didn't want to legitimize Mr. Trump at a time when he has routinely defied constitutional limits on his authority. And the Financial Times focusing on foreign policy, reporting President Trump lashing out at Tehran's, quote, sinister nuclear ambitions just 2 days before talks in Geneva. Coming up, Henrietta Pacquement of Allspring. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A turnaround for the ages. President Trump touting his economic policies in the State of the Union address. Stocks turning once again. The future is a little higher now after that relief rally from yet another AI scare. And all of that as investors await quarterly results from Nvidia this afternoon. It is an exciting day all round. Let's take a look at those futures. Yep, still higher. They did erase some gains after the State of the Union. Didn't have any real new policy pitches. But we do have another day of gains potentially on our hands, at least until Nvidia reports. After that, we'll see. That could change everything. But again, yesterday we saw the Nasdaq up 1.2%, and it was software companies that led the gains. So very much those AI jitters calming down. Let's take a look at bonds. We'll be talking about them next with Henrietta Pacquement. Not too much movement, although we are seeing that 10-year yield and the whole curve really creep higher just ever so slightly, but we're in those ranges as we have been. Let's take a look at Japanese yields, though, because the back end of the curve in particular had a huge move higher today. 338, as you can see there on the 30-year yield. The 40-year yield moved even higher than that. And the yen is weakening pretty incredibly once again, well above 156. All of that helped the Nikkei earlier with gains of 2.2%. And the reason behind it all, or one of the reasons, market participants having a lot of fun, but also Sanae Takeichi nominating 2 dovish reflationary board members to the BOJ to replace some retiring members. And that's certainly giving the market a lot to think about. All right, let's get to some individual movers now. She's back again. It's Abir Abu Omar. Abir.
Good morning, Bonnie. Let's begin with HP, pairing some losses from earlier in the pre-trade session, but still quite a bit, down 4.5%. There's a bunch of factors playing into this performance today, and that's on the back of earnings. That is on the back of some of the tariffs. Now, the company has had to move some operations out of China to mitigate the impact of President Donald Trump's tariffs. But perhaps what is mostly interesting here is demand for memory chips. We talk about companies that are prone to the increasing prices of memory chips, and HP is definitely one of those companies. Now, it's saying that those price increases may press on its margins until the end of the year or possibly into next year as well. Moving on to another one in the AI space, and that's Workday. This HR software company is falling quite a bit this morning, 8.4% down, and that is on the back of this whole AI disruption hype that we've seen play into the market now. It's settled down quite a bit yesterday, but it's playing into software companies that are not doing so well this year. Finally, moving on to Axon. Now, this is a little bit different. It's not AI. It's not software. It is a company that manufactures tasers, that provides protection tech in the U.S. and beyond, and it is doing quite well this morning, up 16% almost in the pre-trade. And Vonnie, as I mentioned earlier, this is one company that is doing quite well, the third best performer in the S&P 500 after Nvidia and Monster Beverages. So up quite a bit this morning in the pre-trade. That is Axon. Vonnie, back to you.
Nice move there, 16%, I'll say, Abir. Thank you so much, Abir Abu Omar. So the 10-year yield then hovering just over 4% as key questions over the economy and leanings of FOMC members, frankly, remain. Nonetheless, Allspring's Henrietta Pacquement is expecting yields to stay in a range with volatility trending lower. I'm pleased to say Henrietta joins us now. She's fixed income investment COO at Allspring. Thanks for joining, Henrietta.
Good morning.
Definitely want to talk about the US, but can we first start in Japan? Because that was some move we saw just a few hours ago, particularly towards the longer end of the curve. What is the market trying to say here or trying to express?
So we've seen a bit of volatility in Japanese spreads over the last few months, right? So this is not new. We do have some new information. You were talking about the 2 new appointments there, so I think that was the driver. And I think the market is still figuring out which direction Japan wants to go from an inflation perspective. I think that's what's on investors' minds at this point in time, and the fact that maybe on the sort of front end there may be a little behind the curve given the inflation numbers that we're seeing there.
What does it do to the carry trade such as it exists these days, particularly when you see the yen jumping around so much and there are so many questions over who will control the yen and what they'll actually do?
Yeah, I think that's a really interesting one, because now when you start looking at the yields in the Japanese markets, they're not looking bad, right? And the sort of differential between the yields in Japan versus the rest of the world is looking a lot lower than it has historically. So I do think that it is something that investors need to look at. I don't think we've sort of seen necessarily the flows that might be associated to that, but I think it is part of that trend of investors looking at diversifying their books from a rates perspective, and maybe US rates being less in favour as a result of that.
Absolutely, particularly when you see them drifting lower like this. Do they continue to drift lower? You're expecting volatility to trend down?
So what we've seen, again, over the last few months in terms of US rates, if you look at the 10-year in particular, it has been trading in a reasonably tight band, say, call it from September. We expect that to sort of continue at this point. Inflation is still high, right? It's still above the target of the Fed, but it has been stabilizing, so I think that's an aspect to look at. And I think there's still some question marks in terms of growth as well, particularly as you get more questions around tech and the sort of next steps there. So that is likely to keep a bit of a lid in terms of rates in the US.
So the bid in treasuries, because, as you say, we're in a tight range, but there's definitely a bid there. Is it a safety bid? Is it, expressing something about the confidence of traders in the market in the US once again? I mean, what is that bid?
If you look at yields that are available in the US, they're pretty attractive. So I do think that one aspect of this is the interest in income. Certainly, that's a conversation that we're having with clients. Is they are looking for that income play, and treasuries offer that. You also have a situation where sort of credit spreads are quite tight at this point in time. So again, the sort of relative value is of interest there. So I think that sort of explains the interest, particularly in the sort of middle to intermediate part of the curve. I think maybe a bit more sort of circumspect on the very long end of the US curve, because that's going to be more subject to potential disruption from a macro perspective.
Absolutely, and tariff questions, yes, that have not been resolved, and refunds potentially in the works. So obviously private credit is not something that you would look probably at a granular level at, but these warnings that keep coming now was Weinstein and some assets being sold off. Does it give you pause at all? Does it make you want maybe richer rewards in your areas?
So I think it is sort of causing a bit more of an interest in the public markets at this point in time, and definitely happy to see that. Private credit, I think, is at an interesting stage. It hasn't really been tested, so I think the markets don't necessarily know how to react to that. So we may be closer to that test in that market. And I think also, if you look at the mix of sector allocations in the private space, it is going to be a little different to what you're seeing in public. If you look at sort of exposure from a tech perspective, obviously a bit less exposure in Europe, a bit more exposure in the US. Again, in the higher ratings, you've probably got a bit less tech exposure. The further down the sort of credit curve you go, the more exposure. And then if you move into private credit as well, you've got a bit more exposure to the tech sector.
I want to ask you about structured credit and municipal credit, because you're looking at opportunities, particularly in mortgage-backed securities and, also municipal credit. The policies of the president when he talks about housing and, not letting institutional investors buy single-family homes and so on, and also, what happens in various different states. Does it give you pause there at all, or do you think these yields will stay where they are?
So, in both those areas, what we've seen is opportunity to differentiate and opportunity to trade. I think that's really what we're particularly interested in the mortgage side and the muni side. We have seen a bit of volatility on the muni side last year, and that's opened up some opportunities for sort of selection in that space. In terms of mortgages, again, this is a bit more of a relative value play, maybe looking against a corporate. We're seeing more opportunities in that securitized space, given where spread levels are generally.
All right. Henrietta, it's a pleasure to speak with you in person. Thank you so much for joining us today. That is Henrietta Pacquement of Allspring Global Investments. Coming up, the longest televised State of the Union address.
Our nation is back. Bigger, better, richer, and stronger than ever before.
More on the takeaways from that address next. This is Bloomberg.
One of the primary reasons for our country's stunning economic turnaround, the biggest in history, where the Dow Jones broke 50,000 4 years ahead of schedule, and the S&P hit 7,000, where it wasn't supposed to do it for many years, were tariffs. I used these tariffs, took in hundreds of billions of dollars to make great deals for our country, both economically and on a national security basis.
President Trump's State of the Union address, laced with celebration of his economic policies, while a number of Democratic lawmakers skipped the event, including Senator Chris Murphy, who said, quote, "Donald Trump is making a mockery of this great institution and he doesn't deserve an audience. These are not normal times and Democrats have to stop behaving normally." Joining us now from Washington is Bloomberg's Tyler Kendall. So plenty of partisanship, Tyler, and counter events and so on. But what were the main takeaways from the State of the Union for you?
Hey, Vani, good morning. Well, it was clear that domestic issues remained front and center throughout President Trump's State of the Union address in a bid to convince Americans that the economy is in better shape than polling tells us that many voters think it is. But President Trump really touted policies that have already been enacted, including those tax cuts under the One Big Beautiful Bill, instead of putting forward some new forward-looking policy proposals like we were expecting ahead of what were officials floating that we could get some new ideas. We did hear from the president that he is planning a new retirement savings account for workers that do not currently have employer-backed ones. But a lot of what we heard was the president calling on Congress to codify proposals that have already been floated, including his health care framework that seeks to shift federal subsidies from insurance companies to American consumers, and also his plan to ban institutional investors from buying single-family homes, two proposals that don't necessarily have a broad support of Republicans in Congress. It also was clear that the president was doubling doubling down that tariffs will remain at the centerpiece of his economic agenda, going on in that speech to threaten our trading partners if they pull out of previously negotiated trade deals, as some of those U.S. Supreme Court justices who struck down his broad-based IEEPA tariffs were sitting front and center last night. Vonnie, well, domestic issues really did remain front and center at the urging of top White House officials. We would be remiss if we didn't mention that foreign policy, of course, came into the conversation as well, something that has really been dominating the conversation here in Washington, including perhaps most notably those heightened tensions between the U.S. and Iran, as President Trump didn't rule out potential military action.
No, absolutely. And of course, those talks in Geneva are scheduled for Thursday. But as you say, Tyler, he did talk about Iran resuming its pursuit of, quote, sinister nuclear aims. So it does appear that that's still very much on the agenda. It was, as you say, very much for a domestic audience, though. Talk to us about the security portion of what the president had to say and how that might appeal to potential voters in midterms.
Well, in terms of the Department of Homeland Security, for example, we really heard on President Trump calling on lawmakers to reopen DHS amid what has been a partial government shutdown. In fact, this was not only the longest U.S. State of the Union address, it is also the first one that has happened while part of the government remains closed. And that highlights both fiscal differences between the two parties, but also differences when it comes to immigration and customs enforcement. Immigration, of course, is that counterweight, that second top issue when we're talking about domestic policy issues here in the U.S., and it's really been something that has been motivating President Trump's base, but we have seen some pushback to what has been a staunch crackdown when it comes to deportation. So that's another issue to watch closely as we head into the midterms, and like pulling on the economy, pulling on the president's immigration policies have dipped as well, though we have seen those numbers come up slightly in the wake of the pullback in Minnesota amid all of the unrest there. But it is going to be something crucial to watch, especially next week, because hundreds of thousands, 206,000 DHS employers could be at risk of missing their next paycheck.
Tyler, thank you so much. Bloomberg's Tyler Kendall up late and early in Washington, D.C. Turning to tech, Anthropic is loosening its hallmark safety rules, writing in a blog post, quote, the policy environment has shifted toward prioritizing AI competitiveness and economic growth, while safety-oriented discussions have yet to gain meaningful traction at the federal level. Let's bring in Mandeep Singh of Bloomberg Intelligence for more. Mandeep, given that these companies largely regulate themselves, should we be a little concerned here?
I mean, in the case of Anthropic, they've been talking about guardrails and safety for quite a while. And in this case, clearly the U.S. government wants to use, the version without the safeguards for the purposes of national security. And I think the company probably had to relent because of the Defense Production Act. So to my mind, it is really a case of the government recognizing how powerful this technology is and, the company having to create a backdoor, similar to what we saw probably with Microsoft Windows back in the day.
Mandeep, Nvidia, obviously the big story today. We're all going to be listening to that earnings call, no doubt. What should we be watching out for beyond a massive increase in free cash flow, apparently?
Yeah, and look, the demand remains way ahead of supply when it comes to these chips. That's what we've been hearing throughout the quarter. I think the key would be how they manage the margin situation, given the component prices have been going up, but there is no doubt that Nvidia has a lot of visibility. They've already guided to, a 500 billion plus pipeline over the next 4 quarters, and that includes, the revenue they'll be generating this quarter and the subsequent quarter. So from that perspective, that gigawatt equation, like 1 gigawatt translates into about $30 billion of revenue for Nvidia, wherever the customers are using their chips, and that is what will drive the narrative in terms of how much visibility they have going forward.
And Mandeep, another company that we'll be very much watching is the Salesforce earnings later on today, and Curious what you think Salesforce will say and how it will approach this software sell-off question. Will it try and differentiate itself from its peers, or will it be the hero and try and sort of protect everybody?
Well, clearly software is under pressure, and I think Salesforce pitch is going to center around them being the system of record and the fact that they are integrating AI agents at their level, using whatever the frontier LLMs they can partner with. So from that perspective, the retention rate is important. But as we saw with Workday's reaction last night, even good earnings won't be enough in this environment. So clearly, the more AI agent integration they highlight, I think the more convincing it will be for the market to believe, they have a path in terms of integrating this new technology.
All right, Mandeep, just a few hours to go. Mandeep Singh of Bloomberg Intelligence, thank you so much. And staying on earnings, retailers TJX and Lowe's are set to release results before the opening bell. Bloomberg consumer reporter Maddie Parker joins us now. Maddie, let's start with Lowe's because Home Depot did report comp sales that beat expectations in the last quarter. Steady demand. Should we expect more of the same out of Lowe's?
Yeah, so Lowe's, of course, have been a pretty bright spot for retail, actually, over the past 12 months or so. There's no doubt they will look to Home Depot's results yesterday, obviously one of their major rivals. And you're right, Home Depot saw steady demand. They said that things were improving a little bit on the home renovation side of things, but actually they were still quite cautious about those macroeconomic conditions. Lowe's, obviously, in the middle of their turnaround, they've really leaned into the digital expansion and the AI side of things. And actually, the previous 2 quarters beat Home Depot in terms of sales growth, so it'll be interesting to see whether that momentum continues into this quarter.
Will any of them have any comments on President Trump's housing policies or his potential housing policies?
Yeah, well, it would be an interesting thing to look out for. I think investors are very interested in that side of things. They'll look out for commentary on the housing policy. They'll look out for commentary also on tariffs, of course. These retailers have warned for a very long time that any tariffs will lead to price increases. And that, of course, will kind of compound the wider subdued consumer environment that has been impacted a lot by inflation, a lot by the cooling labour market. So I think perhaps they will have something to say on both those fronts.
What should we expect out of TJX? It's been a strange couple of years, and we got confidence data yesterday that looked better than we would have thought, but that doesn't mean that low-income consumers are having it good.
Yes, of course. I mean, TJX is one of those where, I mean, their shares have been doing quite well. There's no doubt that the kind of stress on consumer confidence, those cash-strapped customers, that's the kind of thing that really does give big-box discount retailers like themselves a bit of a lift, a bit of an edge. But it has been a strange couple of years. It's one of those where they do rely a lot on those consumers coming out and spending their money. The past year has no doubt been quite a sort of patchy scene for consumer confidence. Whether or not they can kind of push forward that value and really emphasise that value proposition to customers is something that we'll see in these results today.
Well, of course, their guidance will have to take into account any impacts from the One Big Beautiful Bill and tax rebates that might be coming down the pike and so on.
Yeah, of course. I mean, that's definitely something that's going to come into play. I think they kind of have had to navigate a lot of those kind of tricky things. Those consumers who are really being hit by so many different factors at the moment, they will say, listen, we raised that outlook at the last results. It'll be interesting to see whether they can kind of continue that momentum today.
And, of course, all these companies will have tariff questions too. Maddie Parker, thank you so much. Coming up, we're going to get you set up for your trading day. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in London. Now a look at what's ahead today. First up, retail earnings continue. TJX and Lowe's before the opening bell. Then we get plenty of Fed speak throughout the day. We've Barkin, Schmidt, Musalam, all today. And then the main event, Nvidia reporting earnings after the market close. Let's take a look at some pre-market movers now. Netflix moving after Warner Brothers is considering Paramount's new buyout offer. We know that to be true, although the board hasn't come to an official decision yet. And then look at Axon, the taser maker, up 16%. Fourth quarter earnings beat estimates. It is a different story for HP, though. That story just keeps getting worse and worse, down another 5% in the pre-market after it guided to the low end of its outlook due to memory costs. And here is your macro picture as we await the market open in just a few hours' time. Futures are pointed higher. It could be another up day. The dollar, though, erasing those gains. That's it for Bloomberg Brief. Surveillance is right ahead. This is Bloomberg.